Mm-mm. Second. Music. I think we are live now. Hold up. Yes, we're live now. All right. Let me send this out. We're gonna get started, guys. Give me a second. Trying to find my way, waking up every day on my knees to pray. Then it's time to get the cake. If I don't, who will? Trying to make bills, what them in my will for my kids when I leave. Thinking ahead, my greatest weapon is my head. Mindset, doing alphabets, get the P's, roll the G. Fly overseas, give it the D. Too many rounds, gas tank on E. F it, roll up another D. I think I'm really him. She wanna settle down. She look around town for a baller, not a clown. She's a queen. She just wants her crown. Get it by any means. Just be a good girl and close up your knees. Let's believe not only for hustlers and girls who got degrees. Baby, kiss me and maybe I can win that pay too. We gonna start soon, guys. Let me get this link out to everyone real quick. Yeah. Make money off that phone, spend it like we don't get this everywhere. Make sure everyone know what's going on, man. We're about to share a lot of gaming bits, man. Take a nap, baby girl. It's gonna be the bread and butter. In that thing, she like switching lanes, ever playing champagne, still balling in the game. You only but you know. Trying to find my way, waking up every day. On my knees still pray. Then it's time to get a game. Make my money, then I roll up a tray. Out the way, baby girl, you can come and stay. When with me, she's always safe. You know you hold a special place. Just keep me, you praise for me every night. That I make choices that are right. Yeah, all right. If a nigga take my loot, then it's Jesus on sight. Let's keep the peace and unite. I don't really want to fight. Just down there, baby girl. I'll be home, man. Trying to find my way, waking up every day. On my knees to pray, then it's time to get the cake. If I don't, who will? Trying to make bills, how to make my will for my kids when I leave. All right, guys, man. Thank you for tuning in. Day two. Okay, very excited about this day two, man. This is entry models. Besides, the whole narrative, market structure, entry models is the next second, important thing before we get to risk management. Okay. So, if anyone is new here, welcome. We're the Texas Heist. We are a free trading community. When it comes to trading, you can't do this alone, okay? Rome was not built by one person, okay? So that is why we created a community of like-minded individuals, people who are on the same path, who want, the same financial freedom, who are trying to create, different streams of outcome, people who are tired of working 9 to 5 and want to escape. Trading can offer you that, okay? There's nowhere in the world, there's no other job where it can pay you this amount of money, okay? There's no cap, you don't have to answer to anyone. All you need is Wi-Fi and your brain and God, okay? You can't do nothing without God, okay? So Texas Highest Trading Boot Camps, man, entry models. Let's go ahead and get into it. Let me make sure the live chat is on. And then any questions you have, feel free to drop it in the chat. I'll take a moment to go ahead and look at there and answer any questions I see. Okay, but let's go ahead and get straight into it. So, Back Snatcher yesterday, day one. Hopefully you guys have watched that. Broke down market structure, okay? How we market our highs and lows, the loot zones, fair value gaps,
the way price moves from consolidation to expansion, manipulation, retracement, all of that. Okay, so that's the first piece of the puzzle. So once you now use all of that to kind of form your narrative on the higher time frame of where price wants to go, you can now start looking to get in on an entry. Okay, whether that's a lower time frame. So whether depending on if you're a scalper or if you're a swing trader, okay? So if you're a swing trader, you probably want to be trading on the daily, the 4 hour, and maybe you're holding trades for like 2 days, 3 days, okay? If you're a scalper, maybe you're getting an intraday and maybe you're in a trade maybe only for like 15 minutes or like maybe to like an hour, okay? But you're kind of in and out, okay? So entry models definition. Entry models, we use this to time when we're going to enter and breach into the bank. Okay. This is very important. Okay. As Backsnatcher said yesterday, you want to ensure that you're trading during a kill zone, whether that's London open or whether that's New York open. Okay. That is when volume and liquidity is very high. Okay. So entry models is going to help tell us when to enter, time the entry based off of kill zones. Okay. Where to enter, identifying the key levels to trade off of, okay? And that's something also Backsnatcher went over yesterday, okay? Loot zones, highs and lows, okay? And then why to enter. So understanding the rationale behind the setup, such as the higher time frame order flow, time and price. Time first, then price, and other confluences, okay? Components, so with entry models, this is going to help us with our market context, okay? Understanding the market's direction and profile. The trigger signal, okay? This is the event or condition that confirms the entry. Okay, so this is that time when maybe the security guard, okay, at the bank is taking his lunch break. Okay, now it's time to breach into the bank. Okay, so the trigger signal, that's very important. Okay, you can't just sometimes you might have a nice setup, you might have a nice narrative, but sometimes you might enter the trade too early, okay? And that's gonna cost you. You enter the trade too early, price goes and hits your stop loss or takes liquidity one more time before finally running. That's happened to me many times. I'm sure it's probably happened to you guys, of here and there, okay? And then confirmation. So additional price action to validate our direction, okay, our narrative, such as C4 or loot zones. So I like to call this reading price, okay? Tracking the institutional order flow, okay? Um, After I get through the PowerPoint and we go into the charts, I'm going to show you guys how I read institutional order flow, okay? And then risk management, having a preferred stop loss and position. So based upon, so depending on how wide the stop loss is, depending on what entry model you're using, is going to determine the size of position that you're gonna put in. Okay, so that's basically your lot size. So for me, before taking an entry, these are the questions I'm usually asking myself. One, where's the higher time frame draw on liquidity? Okay, so where's the volts? So depending on what time frame you're trading on, that will let you know where your target needs to be. Okay, you can't get too greedy. Two, what is your current market profile? Is price consolidating or is price trending? Once again, this goes back to what Backsnatcher was saying yesterday. Price might be consolidating. Okay, so you might think you have a move or maybe on the 4 hour, but now when you drop down to maybe the hour to 15 minute, the price is consolidating, and price may be consolidating because it's Asian session. Okay, so you need to know the type of market profile you're in because sometimes if you know price is consolidating, okay, then after consolidating, price has to expand. Okay. So price can maybe first expand if you're looking for sales. Price could be consolidating during Asian. Okay. Then price can come into London and then expand to the upside. Okay. But that expansion to the upside is not going to live too long because price is now going to start selling all the way back down, which is simply going to be a liquidity grab. Okay. So now that can happen during London. And then when New York comes, we might have a retracement profile. Okay. And then with that retracement profile, you can now look to get in to target the liquidity to the bottom. and then New York should give you that expansion profile, that distribution back down to the downside. Okay. It's priced at a key level during a kill zone. Okay. So just because it's London or it's, it's New York open or NYSE open doesn't mean you just get in or, you look to press a button. Okay. You want to identify, are we also at a kill zone? Has price reacted off of a key level during a kill zone? Okay. So maybe we're hitting a 4 hour loot zone, maybe an hour into New York session. Okay. But maybe it's New York session and price is really just in a range. There's nothing for you to do. And maybe there's no key level there. We're just in the middle of a high and low in between. Okay. Nothing for you to do. And then number four is there any news that could impact price action? Okay. So you always want to make sure you're checking forexfactory.com, and whatever pair you're trading, you just want to ensure, is there news while you're about to place a trade, because you might have a great trade idea. Maybe you didn't know that there was news at 7:30 a.m. Central. Okay, maybe it was CPI or NFP. You're in a trade, you think you have a nice setup. You didn't know there was news. News drops, price wicks goes up, goes down, wicks you out, takes everyone out before finally going to your predefined vault. Okay, so you always want to ensure, check the CCTV and make sure that there's not any news. Okay. All right, so let's get into it. Now, so now we've gone over the definitions and things like that. Let's go into the first entry model, which is a flashbang. Okay. So a flashbang is when price sweeps a low or a high and it fails to close beneath it, creating a wick. Okay. So if you look at this picture over here, we see we have this low, we have this high. Okay. So this right here, this low and this high, this establishes your range. Okay. And then you can see price is falling down. So from here, you're in the middle of the range. All right, there's nothing really to do right now. You're in the middle of the range. Okay. So in Texas Heights, before any type of whatever trade idea we might have, we don't do anything unless there's a flash bang. Okay. Think about it. If you're breaking into a bank, you're not just gonna run up in there. You might use a smoke grenade. You might use a flash bang to kind of, distract everyone. So this liquidity grab, this is what that does. Okay. It distraughts everyone. Okay. So flashbang and then to the upside. So this is the most advanced type of entry. And why I say it's advanced is because, so imagine this candle just printed. Okay. And now this candle is just going all the way down. It's going all the way down. Okay. So advanced traders, people who, years of experience, people know what they're doing, they might be comfortable taking an entry here as price is still selling. Okay. And I say this is advanced because as price is selling, you don't know how far down it can go. So where are you going to put your stop loss? Okay. You really don't know how far down this can go. Okay. So which is why I say this is an advanced type of entry and a high risk and a high reward. Okay. High risk because once again, you don't know where that stop loss is going to be. Okay. Unless maybe you're looking to the left, maybe there's some key level or maybe some type of significant swing low that you can put your stop loss on. Okay. And then high reward because this is the lowest point. If you're looking at this now right here, this right here is going to offer you the most reward because you're getting in so low. Okay. So instead of someone getting in, oops, instead of someone getting in maybe somewhere over here and maybe only catching this move from here to here, if you get in on this flashbang, you're not able to capitalize on this whole expansion move to the upside. Okay. So this requires significant experience, intuition, and chart time. Okay. So it's kind of think of this flashbang like, Steph Curry. Okay. We've all seen Steph Curry shoot a three, and before the ball even goes in, he turns around, starts walking away. Okay. That is, he's put the work in the gym, countless hours in the gym to be able to be that confident, in his shot. Okay. So getting comfortable entering at liquidity at the lows when you're trying to buy, that's going to take some chart time experience and intuition. Okay. Also, with this entry, no confirmation. Like I said, there's no real confirmation. It's really just intuition, and you have to be ready for it. Not recommended for beginners, and this should be used as a signal to look for an entry in the right market conditions. Okay. So once again, like I said, you throw in your flashbang. Okay. Distraught everyone. Then we look to get in. Okay. So I'm gonna come back to this example later. Um, let's go ahead and go to the second entry model. Okay. So now the second entry model we have is a C4. Okay. So definition. Okay. So this is a candle or a consecutive sequence of candles that either take out liquidity or fills liquidity. Okay. So what do I mean by that? So looking over here, okay, price goes down, prints this low, goes all the way back up, and now it creates a swing high or a lower high. Price now pushes all the way down, stops right here, makes a low, price pushes up again, makes another lower high. And now look, this one, two, these last two downward close candles to take out the low. Okay. Once we close above these two candles that took out the low, that is now going to create a C4 or in ICT terms, an order block. Okay. So essentially, this price closing above these last two bearish candles, consecutive candles, this is a change in state of delivery. Okay. So now we've now switched from a selling program to a buying program. Okay. So you're going to draw that line out. Okay. And that's your C4 right here. So within these two downward close candles, D anywhere here, you can even draw this as a box. Okay. Anywhere in this area would be a good buying spot. Okay. Putting your stop loss beneath this low. Okay. Very important. Putting your stop loss beneath this low. So in the flashbangs, okay, you don't know where you're really going to put your stop loss because structure hasn't properly formed. Okay. But now with this C4, when you enter here, okay, you can now have an area where you can go ahead and put your stop loss. Okay. Because structure has been formed here. Okay. This is a moderate risk, moderate reward type of entry. Okay. Easier to execute with clear rules for entry and stop loss placement. Like I said, within this area, this is where you want to be taking buys. Okay, so a clear rule for an entry and a clear rule for a stop loss. Price underneath this low. Okay, so are you seeing my mouse? Okay, my mouse is showing. Okay, all right, just checking. So let's see.
Yeah, you're good.
Okay. So gives confirmation unlike the flashbang. So once we close above these two downward close candles, causing that change in state of delivery, okay, that's a confirmation that price now has a higher probability to buy and reach this high, the volts. Okay. And then this type of entry model, this is vulnerable to missing moves if market doesn't retrace back to C4. Okay. So there are times when this might happen. These two downward close candles might take out liquidity and price pushes up. There might be times where price is really strong and price just keeps buying and price doesn't fully come all the way back into this area, into this C4 area. Okay. So there might be times like this. And once again, once we get into the charts, we will show more examples like this. Okay. The next ones are loot zones. Okay. Bag Snatcher went over this yesterday. I'm going to go over it some more in great detail. Okay. So definition, a spot in the price of chart where a quick one-sided move left an imbalance. Okay. So if we look over here, zoom in over here. I think you guys can see this. There's this from this candle's high to this candle's low. It was all buying, okay, all grain. So think of, I like to explain fair value gaps or loot zones as think of if you're painting a wall, okay, you have a paintbrush, okay, you go down on the wall once, okay, there might be spots that didn't get filled in correctly, so now you have to go all the way back up with the paintbrush, okay, to fill in those spots, okay. That's kind of how a fair value gap works. Oh, real quick. Solid. Okay. Um, so once again, from this candle's low, this candle's high, this this gap in price, that is a loot zone. Okay. So moderate risk, moderate reward, kind of like the C4. Okay. Simple to execute with clear steps for entry and stop loss placement. Okay. So you're going to enter in this loot zone. Okay. And you have two areas where you can put your stop loss. Okay, an aggressive stop loss would be putting your stop loss underneath this loot zone. Okay, under maybe right here or underneath the body right here. That would be an aggressive stop loss. Okay, a conservative stop loss would be putting your stop loss beneath this low right here. Okay, so entry, stop loss. Okay. And very important thing about these loot zones is or I guess how should I put this? A high, so not every loot zone is going to work, okay? And once again, this is based off of probability, okay? You want to be taking high probability loot zones that are going to play out, okay? And those really happen two things, okay? Price is at a key level, okay? And price does a flashbang, okay? So when price is at, so let's say this over here was some type of, maybe we're in a daily loot zone or we're, 4 hour, low, swing low, and price is here. Price comes and takes, this is probably London lows out. Price comes and takes London lows out, pushes up, leaves this price, this gap in price, comes back, fills that in, and then pushes up. Okay. And I'll go into the charts and I'll show you, I can also show you examples of some fair value gaps that don't work. Okay. So for example, this one is perfect right here. So this right here, we can see how this loot zone from this candle's high to this candle's low, we have this all buying. Okay. So you would draw a box from here to here, draw that out. And as you can see, this loot zone didn't support price and push price back up. It failed. Okay. And once again, this is not a high probability loot zone because it didn't take out any liquidity at a key level. Okay. So this for this entry model is vulnerable to missing moves if price doesn't retrace back to the loot zone. So once again, kind of like the C4, price can be so strong that once price, maybe after this green candle, price just kept buying. Okay. So there might be times like that. This is best recommended for beginners, and this can be coupled with a flashbang and a C4 for extra precision and confluence. Okay. And I will break this down some more once I get into the charts. Okay, entry model number four. Okay, entry model number four. I hope you guys are taking notes or taking pictures or whatever. Okay, like Back Snatcher said yesterday, you have to write these things down. Okay, our brains are not as storage houses. They're processors. Okay, so inversion loop zone. This is when a loop zone that was used as support or resistance gets inverted and is used as the opposite. Okay, so now what do I mean? So look at how price, boom, goes out and takes this low with this big bearish candle. Boom. Okay. This right here now creates a loot zone. Okay. So if price is still bearish, okay, if price is still bearish and if price is to continue down, this loot zone should act as resistance to push price down. But what happens? Price closes above this loot zone, okay? So now this loot zone that should have acted as resistance now price might use that as support to go back up because we just inverted it. Okay. So this is a bearish loot zone that got invalidated. So once price comes back to it, okay, this would be a good buying area to take price higher with your stop loss once again, at the bottom of this loot zone for an aggressive stop loss, maybe here or here, or at the swing low that price formed over here. Okay. And this is some game I'm about to give. Okay, make sure you write this down. As you can see right here, so yes, we have this bearish loot zone, but we also have this loot zone right here. Okay. So with this, when an inversion loot zone coincides with a loot zone, okay? So when this bearish loot zone coincides with this bullish loot zone from this candle's low to this candle's high, okay? We call that a balanced loot zone, or in ICT terms, a balanced price range, okay? So this is when price is it's kind of like that example of the paintbrush on the wall. You paint down, okay? You left the gap in price on the wall and you paint back up, okay? Now this is properly filled and properly balanced, okay? So this um and then the key thing is you must wait for price to disrespect the loot zone, then wait for a retracement back into the loot zone. Okay. I kind of demonstrated that, but didn't really say it. Okay. So this is an inversion loot zone. Okay. All right. The fifth, does this fit number five? One, two, three, four. Yeah, number five, entry model number five. Okay. Landmines. Okay. Or an ICT term, a breaker. Okay. Definition. The bullish candle that causes price to do a flashbang. Okay. So look at this. Pay attention. Pay attention. Price goes down and makes this low. Price goes up, makes this high. Okay. Then this high pushes price down to take out this low, causing a flashbang. Okay. So this last upward close candle, this last bullish candle before the down move to take out liquidity, once we close above it, so once we close above this bullish candle right here, or this with this up move right here, okay, this can now be used as an area of support to go higher and vice versa if this was bearish. Okay. So moderate risk, moderate reward. Medium difficulty in executing, depending on how big the landmine is. Okay. So depending on if like this candle could have been really big, it could have been a big candle before going down. So that's a bigger price range to work with to try and get an entry. Okay. So once again, it can be medium difficulty depending on how big the landmine is. Luckily, this candle wasn't that big and they gave a nice area. Okay. Must have a flashbang occur first. Okay. So there's no landmine without a flashbang. Okay. So if you're paying attention, all these entry models call for a flashbang. C4, flashbang. Okay. All entry models that start with a flashbang. You don't run into the bank smiling, happy, laddie daddy. Okay. Smoke grenade, flashbang. Okay. You don't want to be seen. Okay. Landmines can be coupled with loot zones for greater precision. Okay. What do I mean by that? We have this landmine. Okay. But now look at this. From this candle's low to this candle's high, that's a loot zone. This right here is a loot zone. So now we have a loot zone plus a landmine. Okay. That is going to give you greater precision. Okay. And then this is a confirmational entry model. Okay. Probably maybe the best confirmational entry model. Okay. And then this entry model, this is the last chance to get in before price gets to the vault. Okay. So this is gonna play into the next entry model, okay? Because once I'm out in the next slide, I'm gonna talk about fibs. But from this low to this high, we will see that price we're buying below discount. Okay. From this candle's low to this candle's high, the 50% is probably somewhere here. Okay. Which is why this entry, would be the best. Okay. So once again I'm gonna show this more in great detail and more examples. Okay. Phone is buzzing. One moment. Okay. All right. The last entry model um is equilibrium and OTE. Okay. OTE stands for optimal trade entry. Optimal. Is that right, Casey? I think it's optimal trade entry.
Yeah,
OTE.
you on point.
Yeah, optimal trade entry. Okay. So this is the Fibonacci based entry. Okay. Um, Equilibrium. So whenever I say equilibrium, I'm always talking about the 50%. Okay. 50%. Above the 50%, we have premium. Below 50%, we have the discount area. If you want to buy, you buy in discount. If you go into the store, you go into Louis Vuitton, oh, prices, oh, a discount on that purse I've been waiting for, you buying that. Okay. You buying discounts. Okay. Optimal trade entry. Oh yeah, I do have it on here. That is a 70.5%. Okay. So right here. Okay. This should be coupled with other weapons for greater precision. Okay. So we're not just, okay, low to high, and we're just buying below the 50% blindly. Okay. You always want to couple this with something else. Okay. I want you guys to just study this picture really quickly. Okay. And tell me what else you see here that between all the entry models I've given so far, what else do you see here that coincides with this 50%? I'm gonna give y'all like 5 seconds, 10 seconds. Okay. Well, hopefully you had some time to think. Looking at this, we have these lows right here, right? Okay. So look how price made this low. Price pushed up, made this high, made this structure high before pushing down to take out liquidity. What is that? That right there is the landmine. Okay. This high, push price down to take out liquidity. Once we close above it, landmine. This high, these highs right here, this structure, all this right here, really. This push price down to take out liquidity. Boom, we closed above it. Okay. And now you can now pull out your fib below the high. And now this candle right here, or you can use like these candles right here, this whole zone right here, draw a box. Okay. And that's your landmine combined with your equilibrium. Okay. Very powerful. So using your Fibonacci, this acts as a filter to ensure you are getting a discounted price if you are trying to buy or a premium price if you're trying to sell. Okay. So low, high, once we have that change of state of delivery, you always want to ensure if you want to buy, you buy below 50%. So maybe price is coming down here. You're not buying here. You're not buying here. You're not buying here. You're buying below the 50%. Okay. And below the 50%, if you can find a key level, okay, maybe there's a flashbang we do. Maybe this is a C4 order block. Maybe we have a loot zone for a value gap here. Okay. And in this case, we have a landmine breaker. Okay. A landmine. Okay. Medium difficulty in execution will require chart time. Okay. So once again, just, this is like the NBA. You got to be in the gym. You got to put up shots. It has to be repetition, repetition, repetition. Okay. All right. So let's get into some examples now. Okay. Let's see. Let me make sure my screen switches. Make sure you guys can see my screen. Let me take this. Okay. You are now on Trading View. Let's go ahead and get into it. Okay. So the first example I can show is
I was gonna say, first of all, solid game. I mean, I hope folks took notes as we transition to the charts now, but that was a lot of information, well put out. And again, like you said, with any skill set in life, what is even driving, you have to have repetition and constantly see this thing occur over and over again. You need to build your intuition. That's why when you get that good, when you keep on putting in practice, putting those hours, you can have intuition. Like you said, Curry shoots a three, he knows when it's going in, so he turns around. When you're driving on the freeway, you might see a car before it even turns left or makes a left. You already know it's going to make the left because your intuition, you've seen this thing happen so many times. So that's the thing with trading. It's about putting in that work, putting in that work, putting in that work. And it takes about 10,000 hours. So it's going to take, it takes time to get to the point of you being precise and sharp, um, and really building the confidence. LeBron James in the league, all these athletes in the league, it's years. So what we're trying to do is again be at that 0.1% of society. We're not just talking about getting a college degree. Well, some of us have college degrees. I have a college degree. I know Professor Liquidity has a college degree. That takes 4 years, 5 years, cool. And then you get a college degree and get you a nice little job that might pay you $100,000 a year if you're lucky. Some people never get employed. But we put in 4 years of work. And if we're being realistic, you also have to go to high school to get to the point of even
Yep.
getting past college and then getting a job. So that's what 12 years of work. So what we're trying to teach you here is the skills so that can make you millions of dollars. And our eyes is on the billions. So just want to put it out there. Just understand you have to put in work and make sure you have the repetition and stay in the market, stay active as much as you can to get that repetition. But solid game so far that you gave, Professor Liquidity. I'll let you take it away. Just want to say that.
Sorry, man. I appreciate the input. That was beautiful. Okay. All right, so let's go ahead and get straight into it. I think I had an example on DXY. Okay, perfect. So this is the dollar index. Let me just clear everything and we'll take it from the beginning, okay? Okay, so we're gonna analyze this price action right here on the daily, okay? So I'm not gonna get too into nitty-gritty. I'm just kind of show the entry models on the bigger time frame because everything that's shown on a bigger time frame happens on a lower time frame. Everything that happens on a lower time frame happens on a bigger time frame, okay? Time is fractal, okay? So let's go ahead and paint our picture. So on DXY so far, as you can see, price has had this big downtrend, okay? Coming here, okay? Finally stopping. Price makes this low. Price makes this lower high. Price, this lower high now pushes price all the way down to take out these lows and now form this swing low, okay? Price now pushes all the way up, breaking above this lower high that caused the flashbang, okay? You following? So now with that, we now have this slow wind that we're now watching, okay? So now this is our range. Once we have this low and once price establishes this high, okay, this is our range, okay? So this is our range. So in the middle of the range, you're not doing anything, okay? This right here is a no trade zone. Price is consolidating, okay? Goes back to what Backsnatcher said yesterday. You need to know what market profile you're in. This all right here is consolidation. Okay. So when price is consolidating and when price is in the middle of the range, you want to wait for price to take out some type of liquidity. Okay. Then once price takes out some type of liquidity, you want to see what price is doing. Is price closing beneath these lows? Maybe doing a retest. Maybe doing a retest, and then it's going to keep going down like this. Okay, that's scenario number one. Or is price simply just going to take out this low and then immediately turn around and maybe start doing something like this? Okay, two scenarios. Okay, range low, range high, middle of the range, nothing to do. Boom. Price now takes out this low. Okay. So that is now gives us a flashbang because price did not close beneath this low. Price came to this low, went down here for a little bit, and now closed back bullish. Okay. So now with this, that's our flashbang. Mm, okay. That's our flashbang. Okay. So now with this, okay, with our flashbang, what now happens? We now form a daily loot zone. Okay. We form a daily loot zone and price now starts pushing up. Okay. Okay. Once again, loot zone. Price takes out liquidity, causes a flashbang. Price creates a gap in price, and that gap in price will now be used as support to go higher. Okay. Same thing, same exact thing that is happening here. Okay. Price is taking out this low, pushes up, creates this imbalance in price, and that's your daily loot zone. Okay. Now, if you're paying attention, okay, if you're truly paying attention, you will see that we also had this. Look at this. We now create this bearish loot zone. Okay, we create this bearish loot zone. If price is truly bearish, price should come in here, respect this loot zone, and then start to drop. Okay. If price is still truly bearish, price should respect this bearish loot zone and start to drop. But as you can see, we go ahead and we invert it. Okay. We invert it and we close above it. So now with that, price now also creates this bullish loot zone. Okay. And now because this bullish loot zone coincides with this bearish loot zone, that gives us a balanced loot zone. Okay. So, so over here, when an inversion loot zone coincides with a loot zone, a balanced loot zone, that can be very powerful. Okay. So the same thing will happen here. So this area right here, this would be a high probability buying area. Okay. I got a question. Why can't we put a buy limit on the demand area below? You can definitely put a buy limit on the demand area below. I'm not sure when you drop that comment. But for example, if you're looking at this area as a demand, okay, maybe looking at this as demand, you can put a buy limit. But once again, you don't really know how low price can go. okay? Because you might, get caught as an early buyer, okay? So there are probably some people that started all buying here. If I go to lower time frames, you see people are probably all trying to buy here and probably all got stopped out, okay? So there's no reason to put in a buy limit. But once again, it can be risky. You don't know exactly where you're going to put your stop loss. And then you also want price to confirm that it's actually going to turn around and start being bullish.
I mean, we don't really trade demand, and so I mean, the word demand is very broad, right? But what you had lined up, the area just marked up as quote unquote demand. There's a reason why price ran and took out the low first. So actually did a flashbang like you've been teaching here. We're not teaching demand and supply. Just want to clarify that.
Yep. Okay. So we're keeping our eyes on this inversion loot zone or this
And sorry,
balance.
sorry, sorry to cut off. But I must say, I did used to trade supply and demand years ago. What we're teaching here is a lot. What we're teaching is light years ahead. It's not even a comparison. So taking notes on this instead, supply and demand. If that's what you use, great. But you're better off trading smart money concepts and getting away from that supply and demand stuff. I don't those stuff don't hold up.
Yep. Okay. So we now see once price comes into this balance loot zone on the daily, that now supported price all the way up. Okay. And if we go down to the lower time frames, okay, which I will do right here, just to show, also show you the entry model on the lower time frame, okay, how you could have executed down in here. Let's drop time frames, okay, okay. So now over here, what do we see on this 4 hour? Okay, let's rewind a little bit. So now price has come into this balanced daily loot zone, okay. So the two things I'm automatically doing, okay. This is a very mean wick. So sometimes, this is also a note, something I personally do. Sometimes when you have a massive wick like this, okay, I sometimes might disregard this wick and start my fib at the bodies, okay? I might sometimes start at the bodies or maybe this body down here, the last close, okay, the last opening close, okay, because sometimes these wicks might be too big, okay? So low to high, okay? We see where we hit the 50%. So we're close to discount, okay? We're close to discount. So that's number one. Let me put it over here. Okay. So we're buying below discount. That's number one. Okay. What other confluences do we see? Okay. We also see this 4 hour C4. Okay. This is a 4 hour C4 or 4 hour order block. Okay. Why is this an order block? This is an order block because this downward close candle took out liquidity. Okay. So if we go down to the lower time frames, okay, you see that 4 hour candle, which is this downward close candles, these candles took out liquidity, a flashbang that took out liquidity. So once we close above these downward close candles, that's a change in state of delivery. That's our C4. Okay. Let's go to the picture. Okay. Liquidity, downward close candles to take liquidity. Once we close above it, change the state of delivery, those series of candles can now be used as an area to support price higher. Okay. Same thing here. Same thing. Flashbang, liquidity is taken out. We close above it. Okay. And you get your entry. Okay. So now, even on here on the 1 hour, okay, you can now even refine your Fibonacci even more. Okay. So now instead of using these lows over here, I can now use this low over here because this is the low that initiated this whole move on the hour. Okay. And you can see that even with this fib, we are below 50%. Okay. Okay. So we have our C4 daily loot zone, and we are now 4 hour C4. Okay. So two confluences. Actually, this is three confluences. The first one was now, guys. I'm being very detailed right here. I'm holding your hand. I'm walking you guys through this. Okay. Okay. So we have a daily balance loot zone that's caused after flashbang. We're buying below discount, low to high. We're in discounts. And we have a 4 hour C4. Okay. That right there would be a great entry. Okay. Now, if you want to refine this more, okay, let me just go down a little bit more. Okay. Now, what I'm gonna do now, hopefully you guys were able to watch the video yesterday. Let me play this out a little bit more. Oh, stop, stop, stop. Okay, so I think for this move actually occurred during, so this move right here, this actually occurred during um New York PM and Asian range. Okay. So gold, so once again, gold is not indices. Indices, they mainly move during New York because that's when, that's when America is trading. Okay. But for gold, because gold is a commodity and everyone trades gold around the world, gold basically can move throughout the whole day, depending on the set, just depending on where price is. So if price doesn't move during London or New York, which we have all this consolidation right here, okay? Then you can wait for the next session to see what price would do, okay? So in this case, now on the lower time frames, we have this low and we have this high, okay? This now creates our range, okay? So once again, once you're in the middle of the range, there's nothing to do, okay? I just did this on DX1, the daily time frame. There's nothing to do. You want price to come down and take out some type of low, okay? So in this case, price didn't take out this low, but price took out this low, causing a flashbang, okay? So once price causes a flashbang, okay, price then just aggressively pushes all the way up, okay? So look at how price doesn't truly even come back, okay? We create a loot zone right here, okay? Price doesn't really come back, okay? The only thing price really did was this would have been a tough this would have been a tough entry, okay? If I'm to get really advanced, okay? And once again, as you guys, join the Discord, you guys keep, coming to whenever we're having our Wednesday reviews or our Monday reviews, you're gonna get more game, okay? So from what I've taught you guys today, I told you guys how for C4s, this is vulnerable to missing moves if the market doesn't retrace back to the C4. For loot zones, this is also vulnerable to missing moves if price doesn't retrace back to the loot zone. Okay. So with that, price didn't really give any retracement. Price just gave a flashbang, the most advanced type of entry, and straight took off. Okay. So, but with this, once you get more advanced and you're able to really read price, you will see that we had this over here. Pay attention. Let me zoom in. We had this 15-minute loot zone from this candle's high to this candle's from this candle's low to this candle's high. You will see how if you draw this out, price came over here and price had used this area to go down. So right here, this 15-minute loot zone acted as a resistance to push price down. Okay. So once we finally over here kind of close above it or kind of invalidate it, and price comes back and price just starts pushing up, honestly, you can either get an entry. So once again, this comes with intuition, okay? Because me, for myself, knowing that price had just caused this flashbang over here and price didn't take out this low, meaning that this low is protected, okay? So once again, that's a more game, it's more advanced that, we'll get into as time comes. Once price starts pushing up and price gets to this level, me, because I have intuition, I can get an entry in here, maybe with my stop loss somewhere here, and knowing that price has a high probability to now go up to these highs. Okay. Once again, that comes with intuition and chart time. Okay. All right, so I got to the nitty-gritty, went to the 15-minute, kind of refined how you possibly could have got an entry here. But once again, the best entry would have been over here. Why? Because we're in this daily daily loot zone and we're at this C4 and we're at the 50%. So really, you'd want to put a buy limit somewhere here. Okay, this will be a good area because this area right here has three confluences. Okay, so this would be a great area to put a buy limit. Okay, and now you really just have to monitor this because where you're going to put your stop loss. Okay, so maybe you can go down to the 15 minute or the 5 minutes to find some type of swing low, but you can enter here and maybe put your stop loss somewhere down here. Okay. So we can do something like this, buy limit. So once again, I always said there's two places you can really put your stop loss. Beneath the candles, the daily loot zone for an aggressive stop loss, or maybe somewhere here or underneath this low. Okay. But in this case, this right here would do just fine. Okay. And because once again, this is a daily key level. Okay, so we're aiming for these targets up here. We have vault number one. I'm on the hour. I'm on the hour. We have vault number one, and we have these highs over here. Okay. So now you can aim for here. Even with this stop loss, okay, this is still a 5 to 1. So imagine you're risking $100 to get $500. Okay. You're risking $500 to get what, $2,500. Okay. And that's just your TP1. And then your TP2 will be somewhere up here offering you an 8 to 1. And this is only an 8 to 1 because this is a daily loot zone. So this right here would almost be like a swing. Okay. All right. Let's go ahead and drill all the way back out, back to the daily. Just went to the lower time frame to show you guys how you could have got an entry over here. Okay. And now let's play price out some more. Okay. Now what just happened? Hope you guys are paying attention. What just happened? Price creates a daily C4. Okay. Price creates a daily C4. Why is this a C4? Why is this an order block? This is a C4 because these last two downward close candles, these are the candles that filled this loot zone, that filled this imbalance. Okay. These two downward close candles filled in this daily loot zone. It rebalanced it. So once we close above it right here, boom, this is now your daily C4. Now, if you've really been paying attention, okay, this is also a daily loot zone. Okay. So now you have a daily C4 and a daily loot zone. This right here is a high probability buying area. Okay. You just obviously need to go on the lower time frame to get your entry. Or if you're a swing trader, Maybe you enter on the daily, buy limit, stop loss. This chart could be the 5 minute, this could be the 15 minutes, this could be the monthly, this could be the 30 seconds. The model is the model. Buy limit, stop loss, then your targets, this swing high over here. Even entering on the daily, this is a 3-to-1, and then your final target might be up here, giving you a 6-to-1. Okay. So now let's drill down to the 4 hour and let's see how we could have got an entry here. Okay. Okay. So let's say you're trading, you missed this entry over here. That's fine. Okay. That is fine. Price pushes all the way up. Okay. All right. If for the people who have gotten this far, I'm also about to drop some more game. Okay. Look at how price fails to reach this high. Price fails to reach this high right here and pushes all the way down. Okay. So now if you are a retail trader, you might be thinking, oh, resistance sells, which is valid. Price rejected. Look at this right here. Rejection, this price area, rejection, rejection. Okay. So these sells would be valid. Okay. But look at how price doesn't fully take out this high. Okay. And when we see that, we call that relative equal highs. Okay. So all this is doing is this is inducing sellers into the market. So sellers are getting in here, and where they're putting their stop loss, they're putting their stop loss above this high. Okay. So with them putting their stop loss above this high, and maybe even here, maybe sellers get in here, putting their stop loss here. This is building up a lot of liquidity in the upside. Because mind you, over here, look at this high. We have this high as well. So when price was coming up right here, price failed to take this high. So sellers are also getting in right here, putting their stop loss above here, building more liquidity. Okay. One more time. Look at this high up here. Look at how price drops. Price starts buying, but fails to take this high. Once again, this is inducing sellers into the market. They're getting in right here because the supply and demand traders, this is what they're trading. This is supply. Price comes into supply, they're taking shorts, which is valid. Resistance is resistance. It's the fundamentals. It's like basketball. A pass is a pass, a layup is a layup. So these are valid buys. Once again, supply. Sellers are getting in, okay, taking sells. So with all of that, that is building up liquidity. There's a lot of liquidity up here, okay? So when price does this and when price starts selling all the way back down, once again, you want to ensure you're buying below the 50%. So from this low to this high, we're doing our Fibonacci tool. We're below the 50%. So anything below the 50%, that's where we want to be looking to take buys, especially within this daily loot zone. Okay. So we're below 50%. We even come and hit the optimal trade entry at the 70.5% level. Okay. So keep that in mind. Once again, I'm going to drill down to the lower time frame. Okay, refine this for you guys even some more. I'll probably go on for about another 10, 15 minutes. Okay, really going to give you guys, the bag work. Okay. So within this, once again, we have our low, we have our high, buying below the 50%, ideally somewhere in this area. Now let's refine price down some more. We now have right here, we now have this 1 hour loot zone. Okay. Now this is some more game if you guys have made it this far. Let me make this a different color. Okay, cool. Okay. So now we have this 1 hour loot zone within this daily loot zone. Okay. So that is a PD array within a PD array. Okay. So once again, we're in a daily loot zone. We're also at a daily C4. Okay. So I'm adding the confluences here. Okay. I'm building a strong case. Okay. Think of it, as a lawyer. You're doing your research, you're gathering all this data, you're gathering all your facts so you can build a strong case. This is the same thing we're doing here. Okay. All this that I'm doing, this is what separates trading from gambling. Gambling, it's random, it's whatever. There's no methodology behind it. With trading, when you trade the correct way, you have methodology behind it. Okay. We have this 1 hour loot zone over here. Okay. And now right here, there's no true entry over here. So actually, let me go to the 15-minute. Check this out. Okay, so now I'm on the 15-minute. And once again, let me go ahead and bring in, oh, no, let me turn that off. Let me slowly incorporate the time of the day. I haven't really been doing that. But let me do this for this right here, 2300. So once again, like Bad Snatcher said, you want to ensure that you set your time zone to New York, okay? UTC 4. But for me, I like to keep mine in Chicago, but I'm always like aware of, the New York time, okay? So right here we have London, okay? So once again, let's go through it. This right here. So what I'm doing right now, I'm now incorporating what Backsnatcher taught yesterday in day one. We have consolidation over here. Okay, this is consolidation. With that, we now have this push to the downside. So all this down here is manipulation. Okay. All this right here is manipulation. Okay. And we're anticipating its manipulation because we are in this buying, in this key level, this high probability buying area. Okay. And then from there, what do we have? After consolidation, manipulation, we have an expansion to the upside. We have this expansion to the upside. Okay. Okay. And now with that, what do we have? Hold on. After we have this great expansion, what do we have? We now have a retracement profile. Okay. So price retraces before we now have another expansion. Okay. So now let's go into this. So now I've just broke down, I'll just use the concepts from market research from yesterday. Okay. Putting everything together. Okay. So let's go ahead and delete that. Now with this, once again, you don't do anything unless it's a flashbang. We have a small flashbang down here. It's very small, but it happens right there. Flashbang. Once we have a flashbang, price now pushes all the way up. And look at this. We have these equal highs up here. Okay. The price has now created equal highs. Sellers are now, so retail's thinking this is resistance. So they're taking sales, they're selling it, they're selling it, they're selling it, they're selling it. Okay. That's fine because we're smart money. We know there's lots of liquidity built up here. Okay. So all we're going to do is we're going to wait for to buy below the 50%. Okay. So there's two ways you could have played this out. Okay. I'm gonna take you through the two entries that you could have taken within this daily loot zone, this daily C4 and this 1 hour loot zone. Once we have that flashbang and we push up, once again, even though price doesn't close above these highs, once you have put in that chart time and you have the intuition, okay, you're going to be confident that all price is doing just building liquidity to go take buys. Okay. Let's do a replay. Okay. So low to high, you want to buy below the 50%. Okay. So anything within this area you want to buy. Okay. So now once price gets here, you honestly could have just put a buy limit somewhere here. Okay. Because this 1 hour loot zone is a PD array within a PD array. Could have put a buy limit there with your stop loss underneath this low. Okay. That's one way you could have played this. Okay. So maybe you don't have time to sit on your charts. Okay. You can simply just put a buy limit in the zone, stop loss beneath the low, 1 hour loot zone. Okay. I'm not going to go into the 5 minute to show you more details, but once again, even down here, look at this. We have a flashbang. We have a flashbang. Okay. The low, this is the low that pushed price down, really. So you could even use this area right here as an order block to go higher. But once again, the best way to have played this would have been with a buy limit. And look at how these buys occurred during London session. Okay. So if you trade London, maybe you would have caught this. If you don't trade London, that's fine. If trading London is outside your rules, then it's outside your rules. Okay. Actually, let me. Okay, cool. So I mentioned we have this expansion to the upside. And now I'm going to show you. I think this is lagging. Hold on. There we go. Okay. Now with this, well, so now for if you like to have confirmation before your entry, once we finally close and push and close above all these highs, this is now giving you a great confirmation. This is a market structure shift, okay? A real change in state of delivery. Once again, low to high, you want to buy below the 50%, okay? Below the 50%, and what are we going to look for? Look at how we have this loot zone down here, okay? So we now have this 1 hour loot zone down here, okay? Hey, it's right there, man. Hey, stop. Pause, 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 pause. Chill. Okay. That's beautiful. So once again, even with this low to high, okay, you want to buy below the 50%. And we have this loot zone, this beautiful loot zone just waiting for us. And look at how this loot zone is also coinciding with that C4. And once again, still within this daily loot zone. Okay. I'm not going to go down to the 15 minute, but once again, entry, price comes in here. Entry, oops. Come on. Entry. Oh, that's the wrong one. Hold on. Entry, stop loss, and you're aiming all the way up here. All the way up here, or you can even go for, you know, these highs, but these right here are your volts. These right here are your volts. Okay. So this trade right here would have offered you an 8-to-1. Okay. So look at how I'm putting everything together. And if I go down to lower time frame really quickly, which is why I was on lower time frame, check this out. 2300 midnight. And then 2300 midnight again. Okay, look at how these buys, once again, low, high, prices in a retracement profile. And right here, these buys happen during New York session. So you would have got in somewhere right here. Okay. Now look at this. You can't make this up, guys. You can't make this up. Within this 1 hour loot zone I drew out, look at how we have this 15-minute loot zone right here. Okay. Once again, a PD array within a PD array. Okay. These things I'm telling, like, It took Bag Snatcher now some time to really put everything together. We're giving you guys this for free. So make sure you're writing notes down. This is a PD array within a PD array, a loot zone within the loot zone within a daily loot zone. So now this buying area alone, this is our 1 hour loot zone, 15-minute loot zone. We have a daily C4 and a daily loot zone. Okay. And also we are at OTE. We had an optimal trade entry. That is 5 confluences to execute this trade. Okay.
Man, bro, I think you're talking too loud, man. You
Hey,
nigga
I'm
all the
giving
sauce.
this is precision. This is precision at the Texas highs. Everything has to be precision. If you run into the bank too early, you're gonna get shot. You're gonna get caught. Okay? We don't want that. Okay. So I'm not even gonna take it down to the 5 minute or the 1 minute. The 15 minutes is really all as a beginner, you don't need to go lower than the 15 minute. I'm gonna keep it 100. The 15 minute is all you need. Okay. So that right there, boom. So I showed you guys how to get into execute this heist over here. If you miss this heist, never have FOMO. Oh, this is going, oh, you try and buy here. Stop. Stop it. Okay. You always want to buy below the 50%. Let price do what it does. Okay. The way price works, prices are just going to go to keep flying. Price has to create market structure. Low, high, low, high. Price has to create market structure. Okay. So let's go back to the daily. I'm about to finish this example, and then I'm going to show you guys a live example that happened today on gold. Okay. That I executed. Okay. Okay, cool. So this is current price action, okay? So this is actually where we are right now on DXY. Looking over here, once again, guys, it's simple. Low to high, buy below the 50% in discount, and look at how price hits optimal trade entry, okay? Even with that, one more time, I'm going to refine it down some more. Look at this loot zone right here, guys. Look at this loot zone. Look at this loot zone, guys. Let's go down to the 1 hour. Look at this loot zone, guys. So this daily loot zone, okay? We already established that this hit the optimal trade entry at the 70.5%, okay? And this almost takes liquidity. But right here, price hits this and takes off. And this buys happened around, this is pre-London, okay? So around 2 a.m. Central, 1 a.m. Central, that's when these buys happened, okay? Takes off, okay? So that is DXY. That is a live example, kind of put everything together. I think the only thing I really didn't show was maybe the landmine, the breaker. Let me see. See if I can find an example. Well, that's fine. That's for you guys to go into your charts and, study this, okay? So before I end this, let's go look at a live example that I took on gold today, okay? So right now in gold, okay. So right now in gold, we're in a daily loot zone. Backsnatcher gave a breakdown yesterday, okay, on gold right at the end of the stream. So right now gold is in this daily bearish daily loot zone, okay? Draw that out and look at how this is acting as resistance, okay? So now our narrative is we're bearish. We are bearish until price closes above this bearish daily loot zone. Okay. So we're looking for price to go lower. Okay. Okay. ICT midnight. Okay, that's fine. This is 2200, close enough. All right, so let's see, where are we? Okay, perfect. Let me do a select bar. I actually have two examples I can show you guys. Okay, so this is gold, okay? So now let's go ahead and break this down. Price does a flashbang up here, okay? We have this from this high to this low, price comes all the way up and takes out this high, okay? Price now pushes down, okay? So now when price pushes down and when price starts buying back up, one or two things are going to happen, okay? I just said this on DXY. Price is either going to test these highs and close above it. Price is going to test these highs and close above it. That's one. Or, and that price will create a higher high, okay, market structure. Or price is going to form a lower high, okay, and then start the bearish trend back downwards. So in this case, we see price forming that lower high, okay, right here. Now pay attention. This is the 15-minute, okay? So now within here, price makes this low, price makes this high. Price comes down, makes this higher low, okay? And this higher low right here, this structure low pushes price up to cause the flashbang. Now, once again, ask yourself, once we get to this high, is price closing above it aggressively and then coming back and retesting it? Or is price going to just come over here, dance around for a little bit, and then fall back down? Price dances around and falls back down. Now, check this out, okay? Now, if you've made it this far, this is some other game I haven't shared yet, okay? This is some other game, okay? A market structure shift, a true market structure shift. Okay, what is that? When price makes this high, price makes this low, higher low, price now makes a higher high. This is the low that pushed price up to make this higher high. So if we are truly bullish, price price should not close beneath this low. This price should not take out this low. Okay. So this low right here is significant. Where's my highlighter? Oops, highlighter. Boom. Okay. So this low is significant. So now check this out. Look at how price during New York, boom, boom, a massive candle, massive. So look at this. Look at the energy as price is going to close to break this high. Look at the energy. It's lacking. But look at the energy as price is going to take this low. Big bearish candle, heavy sellers, boom. This low has now been taken out. Okay. That's a market structure shift, a change in state of delivery. And now with that, this high over here, this high should not get taken out. Okay. So with that, this downward close candle, this last downward close candle, that before price goes up to cause the flashbang, this is now going to be your landmine, okay? Right here. So this is a bullish landmine. The high that pushed price down to take the low, this will now be used as support. In a bearish scenario, the low that pushes price to take the high, once we close beneath it, that will now act as an area of resistance, okay? So this right here would have been a nice trade. Stop loss up here or here, depending on if you want to be aggressive or conservative. And you're going to TP down here at this vault or at this support, okay? So price is going to hit that. And then that right there this right here is a beautiful entry model, okay? Now, mind you, even with this landmine over here, okay, we did have this big, massive loot zone. Okay, so if you don't want to use landmines, you could have used this loot zone, Same thing. Okay. So that's an example. But let me show you the example I actually took today. Okay. So now pay attention. Once again, this high should not get broken because this high caused the market structure shift to the downside. So now this high is protected, or at least it should be if we're truly going to be bearish. Okay. So with that, what happens here? Look at London session. This is London session. London session creates a low and price goes down and now creates this low, high, low. Okay. So now this low pushes price up to do what? Cause a flashbang. We now have a flashbang. Okay. Now with this, I'm going to drill down to the 5-minute because that's where I got my entry. Okay. So now in the 5-minute, okay. Now over here, once price comes to this high, once again, are we closing above this high or are we just wicking off of it? Wicking, bearish. We wick, we have these two bearish candles with energy. Boom. Okay. And price comes in and we have this 5-minute loot zone. Okay. Right here. So once again, I just said this again. So once price makes this high and price makes this low, price is either going to come up and make a higher high or price is going to make a lower high. Market structure, price makes a lower high, bearish. Okay. Price pushes down to push down. Okay. Now, this is also something I said, okay? We have this low. Price necessarily doesn't take out this low. What happened here? I don't know. Price doesn't take out this low, okay? So all this is doing is this is now inducing buyers, okay? So retail is thinking this is support, or if you want to call it demand. Their buyers are buying here. They're buying here. We've just had this push up. We broke structure, made it higher high. So once price comes, they want to buy here. Okay. And as you can see, it does offer a small move. Okay. But it doesn't live too long. Okay. So with this equal lows down here, I was like, cool. Price is simply just building up more liquidity. Okay. And I now saw this 5-minute loot zone over here. Okay. This 5-minute loot zone. Boom. Okay. So as you can see over here, I think on Forex, so on Forex, price actually does poke into it. But if you trade futures on the MGC or the GC, you see that this 5-minute loot zone was wide open. Wide open. Okay. So where's my replay? Okay, so this is what was happening. So once price now came here, I was like, cool. We do have these highs over here. So we have remember, every entry starts with a flashbang. Okay. I know we had a flashbang up here, but if you missed this flashbang loot zone entry, that's fine. We didn't take out these lows. That should be a hint. Okay. Sells, liquidities. Always ask yourself, where's liquidity? We had liquidity up here. Price took out liquidity. There's no more liquidity up here, guys. There's no more liquidity. But look at this. Buyers, stop losses, buys, stop. Liquidity's down here. So now as price left came down here once again and left these equal lows and price started pushing up, 5-minute loot zone. We had this little internal swing high that caused a flashbang. And once again, guys, you always need to ask yourself this question. When prices come into a high, are we closing above it or are we just wicking? Wick, bearish engulfing, bearish. Okay. And look at how this entry coincides with midnight opening. Okay, so my entry was something like this. I waited for this bearish candle to close bearish. I probably should have had a sell limit somewhere in here. But because of the time of the day, this was like 2:30 p.m. I wasn't too sure. So I market executed with my stop loss above this candle's high. Okay. And now my target was down here for my TP1, giving me a 2-to-1. And then obviously we're going to see if price can get all the way down here. Okay, which will offer me a 5-to-1. Okay. So play that out. You see that price closed up in New York, but as soon as Asian session started, it just started busting. Okay. Boom, 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 boom. So as soon as price hit this low, I went ahead and took partials. Okay. I took close out 70%. I said break even. Okay. So I'm going to talk about more of my risk management tomorrow. Okay. We're going to have liquid extractions also come on and talk about risk management. But I will talk more about my risk management tomorrow, how I manage my trades once I get into them. Okay. So I take partials over here. No one ever went broke taking partials. I take partials, I set break even, and then I let my runners run. Okay. And as you can see, price is actually is beautiful. Okay. Now, institutional order flow, real quick, a quick lesson. If price is truly bearish, if price is, truly trending, you want to see fair value gaps be respected and you want to see C4s be respected. What do I mean? Okay, we kind of have this gap in price over here. Price kind of opened up weird, but we do have, this gap in price over here. Okay. So this was all sellers. Price came up momentarily, filled that in. Okay. We have another loot zone right here. Loot zone. Price comes in, respects it, drops. Okay. And this right here could also be used, looked at as an order block, a C4. This last upward close candle that pushed up to also touch liquidity, this loot zone. Once we close beneath it, that's a C4. So whether it's C4 or loot zones you want to track, you can do that. Look at this. Boom, boom, boom. Loot zone being respected. Okay? Being respected. Drops, makes a lower low. When price is bearish, we're going to get lower lows, lower high. Lower low, lower high. Lower low, and this is about to be another potential lower high. A loot zone, once again, it looks for so far as being respected. And I believe price should come all the way down to these lows once again, or this area, because once again we have lots of liquidity. Look at these lows. We have lots of liquidity. Okay. And then like Back Snatcher said yesterday, we are predicting hopefully price takes out these lows, and then these lows. Okay. But we know we're gonna take it day by day and just see what price gives us. Okay. So man, that was wow, an hour and 34. That was a lot of information, guys. That was a lot of information. I went into the nitty-gritty, went down to the 15-minute to show you how the same entries or the same analyzation I'm doing on a higher time frame, I'm doing down the lower time frame. Okay. A PD array within a PD array. Okay. That's all I got for you guys, man. I hope you guys found that insightful. Tomorrow will be day 3, risk management. So once again, okay, so let's put everything together. Day 1, market structure, market profiles, time of the day, kill zones. Okay, that is how you build your narrative. You do your top-down analysis. Day 2, today, entry models. After you've done your top-down analysis and you have your bias, your narrative, you now need an entry model to see where you're going to enter in to capitalize on this bias. Okay. Day 3, tomorrow, risk management. You are now in the trade. You are now in the bank. Okay. How are you going to keep yourself from getting shot? How are you going to ensure that you actually leave with some money. Okay, you did all this work to break into the bank. You need to make sure your time was worth it. You need to leave with some money, or else it was a waste. Okay, we're gonna show you how I do my risk management, and then day four it's good. It's gonna kind of be like, what I just did now, really putting everything together. Okay. That's all I got. Backsnatch, you got anything, man? Anything you want to add on?
Man, I mean, I think you said it all. I mean, you definitely, I hope people appreciate, the free game and you taking your time to really break this down thoroughly, man. You gave a lot of information. Again, if you stay to the end, you guys should go back test that PDRA within the PDRA. That's some unforgiving game right there that we just get away for free. But again, looking forward to seeing you guys tomorrow. Share with a friend, and we're gonna keep on dropping the gems. And ideally, you might do this every month, depending on how we feel about it. But again, I think you killed it, man. This is a good presentation, and I hope the audience got a lot from it.
Solid, solid, solid. All right, thanks, guys. Catch y'all tomorrow, same time, 7 p.m. And once again, if you didn't watch day one, make sure you go back and watch day one. Rewatch today as well. Rewatch, and we'll see y'all tomorrow.